Hello traders, Nick Shaheen here, looking at the age-old question of, do headlines matter? No, they don't. They do not matter. Anytime I act on a headline, I probably will set myself up for failure. But today's discussion is not about the ES, which we were looking at here. It's about the XRT retail ETF. So I was discussing it with a friend, and he said that he was confused with the retail because the results were good, online trending up relative to last year, but overall retail is down. So I don't think that he mentioned the second part, but he didn't know how to trade it, or he was confused about from the headlines, and he hasn't been seeing it in the action because today retail is down on a red day in the S&P. So maybe it's not retail all by itself, it's just price action. So to me, I said, I don't know how I can trade retail. I know for a fact that in his case, he was trying to trade it. So if somebody's investing in retail name, whatever the name is, Lulu, Ulta, Amazon, to me, Amazon is not retail. It's really a technology company. But included in the retail bunch, then it's different conversation. But in this case, I know it was for a trade. So to me, I said, well, how about we take out the fundamentals? And this is where it touches on, do headlines matter? Even do fundamentals matter? Well, obviously they do at some point if I'm investing, but if I'm trading, they don't, because a chart is a chart, and I'll prove it. So we went back and forth, and it was a chat room. So I finally said, okay, how about this? How about I set up a trade inside the chart that I see? So for me, retail would be a buy if they break above the last few failures, which happens to be a trend line here. And I'll draw it. So to me, 45.5 or more, a close, this is a daily chart, could indicate the start of an inverse head and shoulder-ish pattern that could hit 48, 49 with some resistance around 46 and 47. These are round numbers, but they happen to match up. And I'll show you what I mean for the setup. So I took it from a debate of theories. Do they matter? Do they not matter? Let's take it out and put it to the test. So I don't know whether I should buy it or not. So I'm going to listen to the chart. It tells me that it has failed here and here, and most definitely here. So this would be one level of resistance. This would be another. 46, 47. Did I not mention those two? I said 48, 49 is the target-ish on the break. So inverse head and shoulders is something that fails one time, and then the bulls rally back to a neckline. Fails a second time, much worse than the first time, but they come back to the neckline. Fails a third time where the bears got too cocky and they said, you know, the bulls said, hey, we failed a lot less than this time. So if they do this, then they overshoot by that much in theory. Now, I know I can find a technician that could argue with my lines, but the thesis is there. The spirit is there. A neckline that keeps repeating, that keeps getting bombarded. If it breaks out, if the demarcation zone fails, the bulls will overwhelm the bears, or the buyers will overwhelm the sellers, and they rush through. So that's why I say, you know, technically it's a lot higher, but I'll shoot for 48, 49 and take the trade. So I will sit on my hands. There are lower time frame levels that I can trade, but this is just on a daily and to just finish the conversation and at least come out of it. And I also said that on dips, I would buy dips. So what does that mean? It looks like there's support below. There's consistent bounce levels. And this level here, 42 and change, 42 and a half, happens to be this period of time's point of control. So this is where a lot of the buying and selling that happened in the past, this period of time, happened at this level. So chances are, if they come back to it, it's not going to be butter. It's not going to go whoop. It's going to be an orderly descent and a bounce level at least one time, assuming there's no black swan effect. And black swans can happen at any point in time. They're not tradable. So took away the conversation from why is it not falling or rallying on good reports. First of all, they're not good reports. The online version is good, but they're eating away at their foot traffic and they're paying a premium for it. I'll use Macy's as an example. Macy's is growing its online sales, but it's killing itself. It's actually taken a loss because it's more expensive for them to do online sales, which is crazy. But they're losing money there for that effort. And what they're doing is they're not taking back any Amazon sales. What they're doing is they're taking away, they're cannibalizing their own foot traffic. So they're killing their physical stores at a premium. So they're paying money on top of what they're already losing to kill their foot traffic. That's my thesis. So if I were the CEO of Macy's, I'd have to change my whole setup. I'll probably make them boutiques, kill most of the stores, buy some sort of a Stitch Fix like service and make it tailored, make it a premium, make it an experience somehow online, foot traffic, combination of two, Uber-like delivery service. I don't know, but whatever they're doing is wrong, and they're killing their own stores. So yes, online this year versus last year, performance overall and the retail, the metrics look good, but the overall sales, I bet you, are worse for most of them. So this will take this argument out. So now I'll just put an alert somewhere around here, say, hey, wake me up when this happens, and then I'll chase it if it happens. Otherwise, I expect maybe bounces around here. I'm going to put an alert here. So if we get there, maybe I want to catch the falling knife, or I just move it. I'll look at it and say, you know, I'm not that comfortable. I'll move it down to here. Because if they lose this zone, they might fall to here, but this is going to be support. So another way to trade it, if it falls down to here, I'll sell put spreads in it to see if that works, and then I'll wait for that to happen, the breakout to happen, if and when it happens. Now, this is a way to take out the argument of the headlines, like the reports from over the weekend or Black Friday and Cyber Monday, and take away all the speculation and all the fundamentals. If I'm confused, use the third-party entity, which is the chart, the technical analysis, to break the tie, or to tell you, hey, there's nothing to be done here. It's in the middle of the range. In fact, it is in the middle of the range, and if somebody argues with Fibonacci levels, this is 50% of this rally. So it's not a coincidence. What is Fibonacci? Is just a bunch of ratios, a mathematician that sees a bunch of ratios reoccurring, and in a rally or in a drop, taking back or giving back 50% of it doesn't change it. It just says they're giving back some profits to establish some footing. That's why you get these ABC moves, A, and then they give back a little bit or go sideways a little bit and then push another way, about the same as this one. So let's see, let's look at this one. 50% retracement is right here. So this rally, half of it is about here. Not a coincidence that they bounced twice at that level. So they're not crazy, these mathematicians. I mean, I'm not one, but I can see it. I mean, I can visually see it. From here to here, about halfway, somewhere around here, which happens to be the POC, the point of control, that orange line, which happens to be almost the same place where it's bounced twice. And these are, the more machines trade, these become more of self-fulfilling prophecies, because machines don't think for themselves. They're programmed. If I see this, I do that. I know they call it AI, but it's BS. If it's AI, they won't react to these stupid headlines. But it's not AI. We're far from AI, really. AI is, to me, I'm an engineer, so the way I see artificial intelligence, if I tell a machine to trade the stock based on these parameters, I expect it to come back and say, you know what, I need to learn how to read Chinese in order to get these state media headlines before they hit the mainstream English written versions of them. That would be AI. So go learn Chinese, decide on its own to go learn Chinese to come back and start reading the state media and then to trade the stock better. Until we get there, it's not AI. It's just garbage in, garbage out. You just expand a more complicated way of reading the code and determining what is a moving target, this and way. Anyway, longer discussion. But for this purpose here, the charts have help. Whether you believe in technical analysis or not, it's worth a look-see. Signing out.